Hey guys, DJ from PTA. Want to go over this trade with you guys. No trades for me today. Was actually out apartment hunting. Definitely found the apartment that I'm going to be moving in. So I'm probably going to be sparingly on the desk this week, just because I got different issues and different stuff that I'm trying to handle and get taken care of, so I can devote the full time to that trade and whatever trades that I'm in. So today was actually a pretty good day. Looked in the chat with the Discord members in there, were really doing well on Aerc. I also saw Dawn, didn't really like the chart. So knowing that this would pop up on the scanner and looking at the trade fully, definitely want to go over this so that you guys can kind of understand the psychology behind it. Now, one of the things I want you guys to kind of look at is these zones. Like this line here is previous week high. So why is that important? Well, it was a previous week high, but this is an area that it rejected in the past, along with volume. So as you can see, if you take a look at the chart, you can see that a massive amount of volume came in and during this area here, right? And this is right around the area where it started to reject. Now this same area right here is the same area where it held as support. And like I told you guys, whenever there's an area and then the stock moves away from that area, or there's an area where the stock moves up to an area, then that's probably a good area to look at as being a support or a resistance. So this was definitely a resistance area here. You had your resistance here, you had your support here. Again, guys, when we talk about that support, you're looking for that area where it may have had some action and pulled away from. So this is where it starts. So start marking key areas as to what a stock can do, what a stock is have the capabilities of doing. Now, now you're north of $40 something per share, and then what you have to do is take a look at the entry day areas of support and resistance. So if we look at the entry day area, and look, this is a 4 hours, so with this nice little run up on the 7th. And then a pullback. Now, once it pulled back, it then held this area, 838. Now, going back, guys, I typically like to do whole numbers, so I'm gonna do 840. So going back into your daily, amazing enough, that's that previous area of support that it played out at. So with knowing that, and then coming into the trade off of the 4 hour, you would have known that this stock was bouncing off of this area. So yesterday was a really good day to actually get an entry with a continuation, because it was bouncing off of that area. Bounced off that area before, then it tested and rebounced that day. So this was actually a good 2-day play for the longs. Now this right here became an interesting area because it pulled back in that area. It was like a little miniature pullback there. Now, as the stock went up, it's showing resistance in this area. Now again, it's 1490, 19. We're just gonna make that 1420. That 1420 area is pretty much pre-market on previous week high. So that being previous week high gives you an idea of what was going on with the stock X amount of days. So from there it pulled down back to previous support, which is now being used as support. So coming into this day, which was the 10th, is where this stock actually ended up moving and held. And then today being the 13th or whatever. So it held over the weekend and then got some momentum behind it. Now this area here is playing as resistance support. So if you take a look at this right there, so we'll call that 1440 is a key area. Now, give or take, this might, you can, do something like this, and then, or even look at it as a shadow. Some people do that as well. I don't really do the shadow thing. That's just me. It's not to say that it doesn't work, because you can see that that was a demand zone in that area. So, some people will look at that and say, hey, man, that was a demand, that was a supply zone. So they went there, got supply, pulled it back down, went through, came back down, and then they played in that area. But again, it's just something I don't do. I kind of just look at the resistance support. You could have looked at this area itself as an area, from here over was an area, that could have been a small demand zone or whatnot. But, that's totally up to you. I got a video lesson on that, support and resistance, to be posted as well. So you can always go to the tutorial videos to take a look at that to learn more about it. All right, so anyway, we got this support which acted as resistance before. Now it's acting as support. So this is what you call an intraday support. So ideally, let me redo this. Let's change the color of this one to purple or lavender or whatnot. So these two supports is from the main daily. This is from an intraday. Anything less than a daily chart will be considered intraday to me. So 4-hour chart, hour chart, 15-minute, 30-minute, 5, 1 minute, those are all intraday levels. Higher the time frame that level is, the better it'll be respected. So 4-hour is next to being a day respect, or 4 hours is just as important. So you see that it wicked out, and then it created what I call a zone for you to look at it going long. So I'm looking at it like this now, and then I'm also looking at there's probably some type of pullback somewhere around here, looking into that day. So I go down, and normally I'll go down to a 30-minute to kind of look at it, see what was going on. I see that right here there was a pullback of some sort. So now I'm gonna go down to let's go to the 15-minute. So this might have been a 15-minute pullback. Now this line here I had drawn can be a little bit closer now, because we know where the areas actually are. So that was another thing. Pull down to the 5-minute, and remember, each time frame is really just giving you a story and understanding what was going on with the stock. So as I see this, as I see it as a nice little pullback here into this area. So you had to pull up, and then you had this yank. Now on top of that, you have 1140 support, which acted as resistance support. When it pulled back over this, that created your first spot. So if you're looking at this entry day, it had volume, just came off of a power move from Friday. We got this as A, okay? So it rise to A, pulled back to B, which so happened to be 4-hour entry support, and then we got us a C where it actually ended up curving around. So let me break that down into a 1 minute so it can be a little bit more crispier, as I would say, but you can actually start to see what was actually going on. All right, so right here, let's pull this out a little bit there. So you had this A. So let me put this together for you. So when you look at this, and remember, this is a 5-minute. So this is a 5-minute chart. So remember, this purple line is the intraday support of 1140. And as we zoom in into the area, you can see that it pulled down, created B, and then from here to there was your risk. So you would probably got in somewhere there once it had already marked this low, and that was 40 cents. So this candle right here, let's go back in here. This candle low was 11.44. The range on that was 24 cents. So you could have got in here. I probably would have got in here off the second candle confirmation and risk to the low, which was 50 cents basically. So why not risk from that area? Reason being is because this is support. We've known that from looking at the higher time frames. Let's go back out to it. That this was a key area that has been respecting. It disrespected here as resistance, and then as it came closer to the edge, treated it as support. So this is something that you got to get a good eye looking for when you're placing trades. So for me, I would have placed that trade right off of the 1140 area, right off that area, knowing I got a 50 cent risk. 1140, probably would have got in around 12s or something like that, or whatever. 1180s, 1190, 1180s, 1190s break, and I would have let it rip, because at that point in time it was right there. It's breaking over a pattern, so it was in a trend. It showed the trend coming up here. This is the trend showing that it was making higher lows. So this was a swing low. That was higher and that was higher. So you got 1, 2, 3 step ups. And this is what I mean about paying attention to the entire chart. So let me start over, because I know some people are probably like, what is he talking about? So this is a key area. Right here you got A, which is part of your ABCD pattern. This was B, and then this was C. C was the actual crack. That's this area here. Now we look at, that's one confirmation. You got higher low, higher swing low, boom, boom. When it swung down, this is higher than this. So you got 1, 2, 3 higher lows. So now it's at B. We'll say that was the third higher low that equals B. So after it ran up and reached out, did a reversal, A, pulled back. I love to see lower highs and lower lows. We got that on this candle, and we got that on this candle. That confirmed the pullback. So once it pulled back, it then caught some miniature support there, bounced, and faded down. Now, if you look, this is where all the price action was coming in off of pre-market, was right in this area. So this is a big area. They pulled it down because their goal was hoping that it'll come down, bounce back up, and then slam. But because of this movement coming here, this is showing that the buyers were stepping in. So this is a nice move up on the buyer section. It came in, massive amount of volume came in straight off the gate. So when you look at this from this standpoint, you can see volume crept in. They tried to pull it down, but they had already stepped it in these areas. Boom, boom, boom. See, looking at the 5, it kind of looks scrunchy. But on the 1, you can see every little order. You can see the pull down. You can see the volume coming in. And then you can see it just kind of die out right here after it came in here. No more energy. They couldn't break it below the 1140. It came back, respected it by 4 cents, and then it went the opposite way. So yeah, my entry would have been probably, worst case scenario, if I missed a move, probably would have been 78 cents. But me being there first thing in the morning, looking at the stock, seeing that it already respected this area, probably would have did a 50 cent risk off of this area here, which would have been 1185, 1190s. I probably would have got in right off of here, because the open of that candle was 1185 and the low was 1177. So I probably would have got in somewhere around 90, probably 96, maybe 12. I might have just played it off the 12, risking to here, which would have been 50, 60 cents. So after that, it kept moving. So when you look at a trade, this right here, and I want to draw this out. What I want you to do is kind of understand what was happening in the trade. And then I'm going to break it down in conjunction. Matter of fact, it's better that I do it that way. Give me 1 second. All right, great. So what I'm going to do is break this down in a 5 minute here. Put your 1 minute here. All right. So let's go over here and take a look at this. So this is how you trade in conjunction of both time frames. You just had this massive rip off of a respected low. So it dropped, went, and ripped. So the biggest thing that you want to look at is you got in here. Now this right here is considered a pullback. Now let's talk about that, because this isn't an official pullback. Most people consider this as a pullback, but it's not. The reason why it's not, and let's talk about that, is that this is simply just consolidation. The candles are relatively, this one engulfed it, but this yanked up. This is all 1 minute stuff. So when I seen this red candle, I would have been waiting to see how it reacted in this area. Remember, I got in down here. So I'm in the good. You know, the stocking went from 12 to 13 with no exhaustion at this point. It exhausted here, but it was still making higher lows here. So that was the trap. So these 1 minute traps is just, to me, people taking profit. The scaries, you know, you got to think, you just went from 12 up to almost 1350. Some people gonna take profit. But when I look at the chart on the 5 minute, it's still making higher lows. So ideally, I'm not getting out. So low, a low, and then another low. So when it created this low here for the beginning of that 940, 942 area, it lets you know that this is where it's at. So it continue on. Now this right here was the first red candle into the inner 5 minute. You could have looked at it like this, because it did start making higher lows, and then it bounced. Shorts got trapped right here, and then they ripped it again. Now the reason why you get these type of moves where like consolidation rip, the reason for that is you got a lot of people who were, you know, FOMO, got scared. Oh crap, let me jump in. I don't want to lose. I don't want this not to happen. This also was a critical area. It's at 1420, previous week's high. Also, that's a key area off the daily. Let's circle back to that daily so you can see it. Remember, this was at 1420, which is off of this area here that it ended up disrespecting back in December of last year. So when you cycle in, you hitting right back to the same area. That's this area here. Go back to the 5. It kept going. So now you got to look at this and say, okay, 5, 10, 15, 20, we got a nice little rip down, then it pulled back up. So some traders got out right there, which was, what's the yellow line? Previous day high. So because that was previous day high and it's a whole number, it wicked down. You know, it wicked down 2 cents lower than the area. I'm sorry, 20 cents. It dropped down to 13.50 instead of 13.70. It wicked out, got a few of them shorts, longs that got out of there, enticed some shorts, and then it zipped back up. Now, once it moved back up, this is where it actually broke trend for the 5 minute. Right there. It's where it broke trend. Okay? So that's when I switch over to the 10 minute. So now you got it broke again on this 10 minute coming into the new minute. We got 5, 10, 20, 30, 40. Then you got a break right here. That would have been at 14.41. Then I would have went to the 15 minute. Like it broke there, 14.06. Then I would have went to the 30 minute. Then you stay in the trade. Low, 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 still higher lows. Then get back up here to 16.56. Now when it breaks on the 30 minute, now you go back to the hour. Still broke on the hour as well, back down to 15.70. So then you wait for it to reset. Once it reset, with all this massive buying pressure and keeping the price action up high, I know this thing was about to rip again. So by this time, you had this major drop off. Now you starting to see it just a little bit different. See, this is consolidation around where? 14.20. Where's that area? That's the area where previous week high, as well as that area back in December of last year played a critical area at 14.20. So you're going to get a bit of consolidation, a pop, consolidation, pop, went sideways again on consolidation, and then continue on and moving up higher. Now this stock had been in play. It's been in play all week. So it's one of those things where, okay, you miss one day, that's no big deal because another day will come around. The key to it all is to always just be prepared. Keep an eye on these stocks because they'll, get off everybody's radar for a couple days and then they'll turn around and actually do something in the next week or so. So that's the biggest thing, is to make sure you keep a track or keep ideas or keep something going. Keep a thesis going on certain stocks just to see what it would do. That was a good move. So it popped up on the pre-market scanners, something that we were looking at. Really solid move. You had all your entry points, so you kind of know where it was going. So it was just a solid move all the way around. So all the guys out there that made pretty good on AERC, congrats to you with your patience, identifying the trades and being patient with them. For those who didn't, take a look at this video lesson a few times. Look at it multiple times so that it can actually instill in you what was going on in the market and how it's being viewed off that support and resistance. Hey guys, if you like what you heard on this or you learned something new, make sure you hit that like button, subscribe, click on that notification bell so you can get all my new videos when they are dropped. As I tell any new trader or any old trader that's out there in this game, stay studying and stay focused.